Shares of Apple tumbling to start the new year after Barclays downgraded the stock to underweight, citing concerns about iPhone demand. Joining us now, Neuberger Berman's Dan Flax, give his perspective as an investor in Apple. Dan, it's good to see you. Good morning.
Good to see you. Good morning.
So obviously we did get this downgrade. It was really relatively muted call, just kind of restraining some enthusiasm and reducing a price target a little bit. But a lot of the big winners in mega cap tech from 2023 did come in for some profit taking yesterday. Where does it leave you with regard to, I guess, Apple's valuation and what is already priced in as the company tries to restart growth?
I think the risks around the consumer demand, weakness in the smartphone market, and of course, China remain factors. But if we step back and think about this story, this has been one of continual reinvention, thinking back to the iPod over 2 decades ago, iPhone, iPad, wearables now has become an increasingly important driver, and of course, services. And so this broadening of the revenue drivers has translated into very, very strong free cash flow generation. And I think the durability of that cash flow will matter most to the stock over the next year as the market looks to better growth later this year and really into 2025. So we continue to like the name here, even with those concerns in the near term.
You know, I guess those factors, one could argue, are already responsible for having the PE multiple on or free cash flow multiple for Apple to have actually become elevated toward its historic highs, right? It seems like it's got this great predictability premium, amazing balance sheet. It seems like the installed base of iPhones it just keeps growing, and therefore you have this ongoing demand. I just wonder if that's going to be enough to have the stock perform, in the next year or two.
I think it's going to come down to whether the company can continue to innovate and execute on these product cycles. The iPhone install base, as you mentioned, is continuing to grow. What I think the market is looking for in this period for Apple, Google, Amazon, many of these companies is what do they look like next year and really in the second half of the decade, because all these companies, including Apple, need to play offense in terms of product introductions and defense in terms of navigating the environment. And so I think the market, as we think about 2024, it is going to look increasingly at what this company, and Apple in this case, looks like. And I think the earnings and the free cash flow generation will be quite a bit higher over the next 2 to 3 years. Excuse me. And that is what the market will focus on, even as we move through this calendar year.
It seems like you're not too concerned about some of the things around the edges of, Apple's competitive moat that have been sort of giving way to some degree, right? The App Store challenges, things like that. Obviously, maybe some of the smartphone competition out of China, and just an idea in general that the urgency to upgrade to the next model of iPhone seems like it might have waned versus prior product cycles.
I think the risks around the App Store, the regulatory environment remain factors. Excuse me. I think the App Store changes that we could see, which provide alternative payment mechanisms, is a manageable impact to Apple's earnings. I think the most important thing from the App Store perspective is that it remains a vibrant platform for developers who ultimately set the prices to innovate and create their own businesses on. The smartphone market has been very, very competitive for many years, including out of China. Huawei, we're going to see how they do as they try to come back. But what we're seeing with Apple is that more and more customers are migrating to the Pro and the Pro Max. They want the better capabilities in areas like the camera. And so when you put that together with the size of the install base, over 1 billion devices, even with extended replacement cycles, you have a business that generates over 200 million iPhone unit sales per year. And so as long as that growth engine continues, even in this tougher period, and of course, quarters remain volatile, I think the company will emerge stronger on the other side and will get more insight into newer areas like spatial computing as one example with Vision Pro, which will take time, but that gives you some sense of the innovation, in my view, that lies ahead.
Yeah, on some level, the performance of Apple over the last, let's say, 5 years, even just last year, very strong, and not really earning its status as a pure AI play, because it seems like that was the whole equation if you wanted to actually be a good performer last year in mega cap tech. Is it an AI company in any identifiable way?
Apple has been infusing artificial intelligence and machine learning into products. The iPhone, wearables, think about some of the health and fitness benefits like the ECG or electrocardiogram app. I think in terms of having a better experience with the device in terms of generating images, a richer experience with Siri. I think the infusion of generative AI into more parts of the Apple devices and the services will lead to a better, more valuable experience. Apple is, in my view, going to put those into the device, and I think that will make the device more valuable, and you'll see, I suspect, more customers continue to reach for the better or the very best device they can afford because the capabilities are so foundational to their everyday.